Hi everybody, my name is Vic Noble, and today I want to tell you about a concept for determining trend without using any technical indicators, something we call market flow. And now market flow, just so you know, it's meant to be a tool, not a not a method in and of itself. And I tell you what, I've been coaching for a long time. I know that this concept has helped a ton of people in getting their direction right in trading, so I hope you find it useful as well. Okay, now again, one thing you have to understand is that, again, that market flow is just one thing to watch for. Okay? You don't want to use it on its own. Like in my Coach's Guide CD course, I explain it all very thoroughly. But the thing that you want to do is combine a few simple things together into a cohesive trading plan. And I mean simple. You know, contrary to what a lot of people do, you do not need a lot of stuff on your charts. Okay, so one of the big problems that a lot of traders have is getting the direction right. And market flow is just a simple way of assessing market direction without using any technical tools at all. Okay, just price. And the advantage of this is that price is instant, right? Whereas technical indicators lag. Okay, so there's only just two basic patterns that you need to know about in order to figure out the market flow, and that's a swing high and also a swing low. And these are also known as fractal points. So let's go now and define each of these and show you what they look like on a chart right here. Now, a swing high point, let's talk about that first. It's any point on a chart that has at least two lower highs before it and at least two lower highs after it. Now look at this point here. I've marked all the swing highs with an SH and they're green, okay? It's got at least two lower highs before it, see, and at least two lower highs after it. It can have more, but it has to have at least two on either side. So here's a swing high, here's a swing high, and so on, okay? And I've, like I say, I've marked them all off, all the swing high and the swing low points. And the thing, just hit the pause button here if you just want to study this a little bit more clearly here. I know it's a bit confusing at first, and you'll see that each swing high point that I've marked off has at least two lower highs on either side of it. Okay, pretty simple, right? A swing low is just the opposite. It's any point on the chart that has at least two higher lows before it and two higher lows after it. So here's a swing low. See how it's got at least two higher lows before it and at least two higher lows after it. That's a swing low. See? Let me just show you an example. See this point right here, this red candle? Is that a swing low? No, because it doesn't have two higher lows before it. It's only got one. This low here has to be high. It should have been higher than this low. It's not, so it needs to have two. It doesn't, so it's not a swing low. Okay. Now, and basically that's it. It's as long as price is making higher swing, making higher swing lows and, sorry, let me get this straight. As long as price is making higher swing lows and higher swing highs, like it is right in here. See that? See the swing low here is, this swing low is higher than this swing low. The swing highs are higher. The market flow is said to be up, and you want to be looking to buy the dips. Okay. If the price is making lower swing highs and lower swing lows, like over here, it's making lower swing lows and lower swing highs, then you want to be looking to sell the rallies. If the market flow is up, okay, now let's just have a look over in this area right here. If the market flow is going up, and it is going up, the only way for the market flow to change to down, okay, is by going below the most recent swing low. So as price is going up here, where's the most recent swing low? It's way back here. And then on this second candle right here, it formed another swing low here, right? The only way for market flow to turn down is by breaking that low, which it did right here. So now the market flow is turned down. Right now, the only way for the market flow to go back up is by breaking above this most recent swing high. If another swing high got formed down here, then that would become the most recent swing high. Okay? And so that's it. Now, one thing you got to know that you know, support resistance levels are very, very important. We'll talk about that in a bit too, but so you don't want to just keep continually buying. There's other things to it. So in a nutshell, what you want to do is you want to align your trading in the direction of the market flow. And when you combine this with other tools and different factors, then what you get is quite an objective way to look for trades. Because, you know, what you don't want to be doing is staring at your screen, kind of stunned with a blank look on your face and no idea whatsoever what it is that you're supposed to be looking for, right? So anyway, let me close this off by making a few important points. First of all, remember that market flow on higher time frames has way more strength than market flow on lower time frames. Okay. In other words, the market flow in the 1 hour and the 4 hour chart, for example, is much stronger and should be given more attention than, say, the market flow on a 15-minute chart. And the other very, very important thing to understand is that key support resistance levels are more important than market flow. Okay, even if price is trending up on a higher time frame, I mean, it's not going to go up forever, right? It's going to hit resistance at some point, and you then want to be cautious about continuing to go long. So just remember that support resistance trumps market flow. In other words, it's more important than market flow. And included with these free videos, I'm going to do a session on reading support resistance levels, and I think you'll find that quite helpful in the general scheme of things. Okay, so that's it. Hope you found that helpful. You know, go to some charts and take a look at market flow and judge it for yourself. You'll be able to see what I'm talking about here. And again, you know, look at it on the higher time frames where the most strength is. Okay, thanks so much. Take care, and we'll talk to you soon.